Hello. U.S. stock futures are looking down at the start of the week amid ongoing global economic uncertainty. Most important things to look out for this week are the third quarter earnings from tech giants Microsoft, Alphabet, Meta, and Amazon, which together with Apple, Nvidia, and Tesla have been responsible for a large portion of the S&P 500's 10% year-to-date gain. In terms of macroeconomic data, U.S. third quarter GDP is due on Thursday, and September core PCE prices, along with personal outlays and income, will be released Friday. In the euro area, the ECB's interest rate decision will be announced on Thursday, at which it is widely expected that rates will stay constant. U.S. government bond yields show no sign of easing, even after retreating last Friday, as the 10-year yield has yet again risen to near 5% levels. Interestingly, last week's Treasury yield surge was not accompanied by the dollar index, suggesting that a possible run-up rally may be in store. The bond sell-off itself is an intriguing phenomenon, as government bonds are typically seen as a safe haven asset and should have seen increased demand in line with last week's gold rush. Oil prices have undergone choppy trading early today as Middle Eastern supply concerns ease due to the entrance of humanitarian aid into the region of conflict. Hope for a diplomatic resolution has increased as tensions in the Middle East did not escalate as much as feared over the weekend. Nevertheless, oil still has a generous upside as tensions remain extremely high and the political scale could be tipped at any moment. On the other hand, the downside potential for oil is also growing on the absence of any real disruption to barrels coming out of the region and the fact that the recent rally was based on speculation of a supply disruption. All in all, volatile, unpredictable movements can be expected in oil prices, making it a high-risk commodity to trade in. Chevron has announced an all-stock transaction to acquire Hess Corporation in a deal valued at $53 billion or $171 per share based on Friday's closing price for Chevron, marking a premium of 10.3% on a 20-day average. This acquisition will enhance and diversify Chevron's portfolio, with a particular focus on the Stabroek Block in Guyana, known for its strong cash margins and low carbon intensity, which is expected to drive production growth into the next decade. As PhillipCapital team, we wish you happy and healthy days.